Back to Baltimore in a moment, but Doug Flynn joins us on these markets, certified financial planner and co-founder at Flynn Zito. So, Doug, good to see you. I'm going to talk about one stock in particular. We haven't mentioned this on the show today, but the ticker is DJT, and that is, yeah, you knew it. Trump Media and Technology Group is now a publicly traded company, and apparently, according to that, it did pretty well today. So, your thoughts on DJT ticker?
Well, personally, for DJT, his wealth increased by approximately $4 billion. So that's because he owns the majority stake in that. And that's essentially his Truth Social and a couple other media companies that they're trying to figure out the valuation of. And it did pop out the gate. So we'll see what happens from here. And I'm sure just as many people that don't want to own it on the other side want to own it. So there'll be a mixed bag of people who want to own that and take part of it. But, there isn't a lot of revenue in this company yet, so you're buying on speculation.
Now, in addition to, or maybe other than your tax tips that come in on Tuesday, I apologize to our audience. With all the breaking news, we're going to skip it today. Apologize. I know everybody tuned in for that right now, Doug. That said, the Larry Fink letter to shareholders is the only other thing I wanted to mention to you today, or do this briefly. Who's Larry Fink? Well, he's the CEO of Blackrock, right? The biggest money management firm in the world. He puts out this letter every year. You see some of these points that he was making about world leaders. And that top point on the retirement crisis, I think, is where I will focus with you for a moment. So Larry Fink's very influential. I actually sent this to my kids this morning, said if you want to understand, investing and what to do with your money rather than just put it in the bank, maybe read through this and you might understand it a little bit more. He writes, no wonder younger generations, millennials and Gen Z, are so economically anxious. They believe my generation, the baby boomers, have focused on their own financial well-being to the detriment of who comes next. And in the case of retirement, they're right. Thoughts on his thoughts on retirement?
I mean, he brings up something that nobody wants to talk about in politics, and that's really Social Security.
Yep.
And we could talk about when Social Security first came out, the retirement age was 65, and the average life expectancy of females was 64 and men was 60. So that gives you an idea of when they wanted Social Security to start relative to how long people lived. And yet now people are living well into their 90s. The system was not set up for that, and nobody really wants to address it. So what that means, fast forward, is you have to rely more and more on yourself. And you can't just rely on keeping the money in the bank or in savings. You need to invest in the market. Now, this is a bit self-serving by the largest asset manager in the world,
right,
which is Blackrock,
he wants you to invest. That's his business. Sure, of course.
Exactly. But it doesn't even have to be just stocks. It could be bonds. A lot of the investments in the Social Security Trust is not even invested in anything that earns any real kind of return. So there have been talks about privatizing, and that scares the heck out of people. But all they're really saying in privatizing is rather than put it into this trust where there's more money going out than really coming in, maybe you put it into something on the side that you can earn some interest in and end up with an overall higher rate of return. The problem is with all of that is when the government comes out with these things that you can't touch, suddenly, a generation or two later, well, now they'll let you touch it. And that destroys the entire integrity of everything. So I think it's good to talk about, and what are we going to do about it? At the end of the day, it all comes down to you. We call it the three-legged stool. You may have a pension, you have Social Security.
Yes.
The third leg is you. You have to save yourself as well.
At the end of the day, you got to do it yourself. So Claudine, who's behind the glass over there and is in charge of the show, told me we didn't have enough time for your tax tips, but now she feels bad. And she says, Doug, give us your best tax tip in 30 seconds. So go ahead. The audience is demanding it. Tax Tip Tuesday.
The best tax tip is look at tax-free municipal bonds relative to taxable bonds. So many people are focused on what they get. It's not always about what you get, it's about what you keep. And the yields on some of these tax-free bonds, especially if you're in a 24% tax bracket or higher, could end up rivaling and even surpassing what you're getting on the taxable side. And it's keeping more for yourself. So take a look at that. That saves you some money on taxes, which in the end means that you'll have more money.
Take that, Larry Fink. That's better. All right, Doug, thank you, my friend. Doug Flynn on all of that today.